All right. Hey, what's up, everyone? This is Kirk here again at Option Alpha. Welcome back to another show this week. This week, we've got a really cool episode because we're talking about risk and reward ratios and percentages for options traders. And essentially, what we're trying to help you guys answer is, am I collecting enough money for the trades that I'm taking? Is the risk reward ratio for the trades that have a 70% chance of success versus a 50% chance of success? Is it high enough and favorable enough that I should be taking those trades? And we're going to show you how you can basically do that, how you can do the math to figure out how much you should be taking in risk and how high that risk reward ratio needs to be to cover the probabilities that you see on a potential trade. So we're going to be covering that in this week's show. I hope you guys really enjoy it as we dive in. So let's get to the slides here and we will just dive right in. So we're going to be talking, like I said, about risk reward ratio for options traders. And again, this is specific to options traders because unlike everything else that you could possibly do out there, I would say mostly everything else you could possibly do out there, what's so cool to me about options trading is that you have these numbers before you actually get into these trades. Like you know that these numbers are there. That doesn't mean that we know exactly where things are going to go, but we have a really good idea of what these numbers and metrics are going to be because we can price trades, we can figure out probabilities, we can do distributions, we can do models, right? And they're not perfect, but they are certainly better than just wildly guessing, right, at things. And so what I want to show you guys today is basically really deep diving into risk and reward ratios for options trading and essentially answering the question why probability of profit doesn't tell the whole story. Because what you've inevitably seen if you've been around trading for a long time or long enough at least, you will inevitably hear phrases like, and I know I've said these before too, make high probability trades. I know I've said that for almost a decade, more than a decade probably at this point, right? Say make high probability trades because you don't want to make trades which are lottery bets. So a bunch of lottery bets, could potentially bankrupt your account, right? If they all don't pay out, right? Nobody wins a lottery just betting on the lottery all the time. It's more of a luck game, right? So if you're going to trade, maybe make more high probability trades. Or you'll hear something along the lines of win more often than you lose, which is kind of cliche because, of course, like you want to win more often than you lose. That's how you stay alive. That's how you keep money in the bank, right? But a lot of these kind of things are at the higher level and they really kind of mask some subsurface stuff that really is where the rubber meets the road for finding good trades. And so while all of that is true to a certain degree, traders often ignore or neglect to analyze an equally important aspect of trading and finding great trades, which is risk and reward. So if you're trading high probability, that's not enough. So just simply going out there and saying, I've got a trade that's a 90% chance of success or 70% chance of success. That does not check all the boxes, unfortunately. That's just one aspect of your trade. And we would argue at Option Alpha that while that aspect is important and certainly something you can filter for, it's not the whole story. And you should be doing things like checking your risk and reward because it's not enough just to have a high probability of success. You actually need to be compensated and have good risk reward metrics in there for how much you could make versus how much you could lose, right? And so I want to go through this a lot with you guys here today. So the question you should be asking if you're going through this is you should be asking the question, what's the minimum risk and reward percentage I need to make a trade? That's really the question you should be asking today. If you have a high probability of success or any probability of success, if I look at that probability of success, say it's 70% or 50% or whatever it is, what's the minimum risk reward ratio that I need in order to make the trade? What is the minimum dynamic between how much I could lose and how much I could win that makes the trade actually favorable for me? It makes it from a so-so trade or a scratch trade or whatever to a favorable trade that where the odds are kind of stacked in my favor. So that's what I need to do. So if you look at this one here, and this comes right out of Trade Ideas, we'll jump in here in a little bit and kind of show you how you can use this. But just to give you a couple examples here. So this is all stuff I pulled today. I literally pulled all this information earlier today. So this is fresh data. This is not old historic data. This is fresh stuff right now. So if you look at a trade in XSP, which is just a short put spread trade, you would look at this trade and you would see right here, this probability of profit is about 70%, right? And then you look at the probability of max profit as 66%. And then the probability of max loss as 9%. So if I just on the surface looked at those metrics alone, you might say to yourself, hey, that's pretty good. Like that seems like a pretty good trade to me, right? And if I even went further and I said, look, well, the stock or XSP right now is trading at 529 and we're selling the 519 short put spread, right? We're selling it 44 days away. So it's got to go down significantly to get to our short strike, right? And then our break even point is 516.59. So it's got to go even further to get to our break even point, right? This is why we have a high probability of success. So on the surface, just looking at those metrics, you would say to yourself, or you could make a case to yourself, or maybe you have made a case to yourself on a subconscious level, this is a good trade. You should make this trade. This is a favorable trade, right? And you kind of like gloss over all the math stuff on the max profit and how much you make and how much you lose, because that doesn't really matter, because everyone says make high probability trades, sell out of the money options, check. I checked all the boxes. My probability of max loss is 9%. You can feel like you're sleeping well and you go to bed, you're okay. Okay. The problem is that if you start actually looking at some of the real metrics, like what's really happening in this position, you can see that your max profit is $241, but your max potential loss is $1,859. So even for a one lot trade, it is a significant loss. For a small account, it could be devastating loss that you'd take years to recover from. And so the problem is that nobody really looks at these metrics and then factors them into the probabilities and how much you should actually be taking in risk reward, right? Like, is this enough? Are these metrics enough to cross over that hurdle, right? And so when you come here, you look at this and you see that these metrics are not enough. So not only does it have negative expected value, which we talked about a lot on previous shows. You can go back to previous shows here that we've done with Tradier, and you can see we talked about expected value and we talked about alpha. But now today we're talking about risk reward, and you can see the risk reward ratio for this particular trade is 13%. And what that's doing is that's calculating the risk reward ratio for the max profit and the max loss areas, because the other parts are these the slope of this line, which we calculate in expected value, right? We do calculate all these data points between the slope of the line, which this one is pretty wide. I mean, it's 498 to 519. That's a pretty wide range, right? $20 plus. And so now what this is doing here with risk and reward is it's taking the furthest extremes, right? Which is, how much could you at most win and how much could you at most lose? And what are the probability of those, and smash those together and try to figure out, like, is this enough money that we're collecting? And what's cool about the way we do it here in Option Alpha now is that we actually turn this risk reward number either red or green. So it's kind of like a stoplight. That's what I say internally. Like, it's a stoplight of like yes or no, or like green is red and potentially avoid or just know what the heck you're doing. Or it's got to be some of the reason you're doing it, versus green is more of a light that says, hey, this looks like it's collecting enough premium and enough to cover the risk, essentially. So here you can see this one is actually 13% risk and reward ratio. So high probability of success trade, high probability of max profit, low probability of max loss. However, the metrics, the actual metrics of the trade just don't add up. Really tight spreads. I mean, like all the things you would want, but it just doesn't make sense, right? So how can we figure this out, right? To go back to our original question, the question we should be asking is, well, what's the minimum risk and reward that I need to make this trade? So if I know 13% is not enough, then what is the minimum risk reward I need to make this trade? So the formula that we can use to do this is we can actually kind of reverse engineer things to a certain degree and basically solve for the minimum rate of return that we need, or the rate of return percentage that we need to see inside the platform to make the trade. And so how we do this is we take 1 minus the PMP, which stands for the probability of max profit. This is right here inside of all of your trade screens, and you can use it inside of Option Alpha everywhere. You can filter by it, you can sort by it, etc. So we take 1 minus the probability of max profit, and then we divide that by the probability of max profit. So it looks something like this. And just here's a very simple example. So if we had a probability of max profit on a trade of 23.8%, we would take 1 minus 23.8 divided by 0.238. And that means that in order to make that trade with only a 23% chance of hitting max probability of profit, we need to have a 320% return on risk to reward ratio. And so that means that you have to find a trade that pays out that much more for the winning trades in order to cover that trade, to make it actually favorable. So this trade that we were just looking at had a max probability of profit of 66%. So again, if we take this now and we say, okay, what is the risk reward that we need in order to get to that, like to make this trade favorable? Like, what would this risk reward need to look like in order to make this favorable? Well, we do the same math here. We do 1 minus the probability of max profit, which is 0.66, and then we divide it by 0.66, which is the 66% chance of max profit. And it turns out that we actually need a risk to reward of around 51.5%. And so you can see this thing is really far off. It was like 40% off, right? We need it to be around 51%, and it's just not there, right? So that's how we do it. We need to know that we're collecting enough money when we win to more than cover the times that we lose on these trades in totality. So let's look at another example here, okay? So let's look at this one. This one has a probability of profit around 70%. This one has a probability max profit, very similar, around 69%. The other one was about 66%. The probability of max loss on this one is 26%. So this looks and feels more like a trade that many people might make, and many people do make inside of Option Alpha, right? Where trades like this, where you're kind of trading around or near or at the money, and you're selling some premium, you're doing a spread. So in this case, it's a short call spread in SMH, and you're doing it for about 16 days. And on first glance, you just look at this and you go, 70% is how much I could make if I win. $880 is my max loss. Okay, that seems about right. And this is where, honestly, I think most people stop. I think that even if you're watching this video and you're not using Option Alpha or something like this, you probably stop at this point. You probably stop and go, okay, because this is what most broker platforms give you. They kind of give you, maybe they give you a probability of profit, maybe, and certainly don't give you maybe the other stuff, right? But then they give you your max profit and then max loss. And so you're forced to kind of do this mental gymnastics math in your own head to say, okay, yeah, I could think that this is maybe a good trade, right? But then when we actually look at the metrics, it's like razor thin, but still doesn't work. So in this case, it's obviously significantly better than the original one we looked at, right? That one was absolutely no go. I don't care how great the probability of profit was, just the numbers didn't make sense. This one is one that's close, and this one is deceptive. And I think trades like this are abundant in the market because they are so razor edge close that unless you're actually looking at the metrics and trading differently, using probabilities and math and risk reward ratios, things like that, you're not going to notice them because they happen too fast. Like the calculations are too hard to do in your mind mentally as you're going through your day. And you're probably not even paying attention to those anyway, nor would you want to calculate the 38.9% probability. And then it moved, right? And then you don't know, right? Because it moves all the time. So unless you're actually looking at this, these trades are so deceptively bad because they're just like razor edge thin. They're not close, right? And this means that you're going to get into a trade. If you were to take this trade and even take it at the mid price, you're going to get into a trade that from the start really doesn't have the odds tilted in your favor at all. In fact, it's tilted against you. And then you kind of need a lot of luck to go your way. And I don't know about you guys, but as a trader, it's not usually that you get into a trade and you're like, oh man, I'm always lucky on trades, right? Like it's usually the opposite that happens where luck doesn't go your way on trades. So you've built in no margin or cushion for error at all, right? I mean, we all do our best guess and make our best guess on probabilities, but that doesn't mean it's going to happen like this exactly in the future. So the additional problem with trades like this, when you do them, is you're not building in any margin for error. So you got close. In fact, I would argue you got significantly closer than the other trade. This is a better trade than the other trade, but it's certainly not the best type of trade that you could place. And again, that's very deceptive because the probability of profit's high. The numbers are closer, but they don't totally make sense yet. And the edges are very, very small. So razor sharp edges that turn it the opposite direction. Notice the risk reward here is 38.9 and it's red, which means that you're not covering it at all. So we kind of give you that red green stoplight. Now look at this one. This one's another example here. This one's a little bit different. This one's an iron condor in USO. So I want to give you multiple examples. Put spreads, call spread, iron condors. It doesn't really matter. You can calculate them for all the different things you want to do for spreads. And this one looks good too, right? 75% probability of profit. The max probability of profit is 66%. Probability of max loss is 15%. So those numbers are about what some of the other ones were, at least for probability of max profit. 2 days away. So this one's a little bit closer. So we know that fluctuations are going to happen a lot faster in this position. But if you look at the actual max profit and max loss, is significantly different than some of the other ones we've seen. And instead of being completely lopsided, even with these new payoff diagrams that we just added literally this week, these are brand new, inside of new positions, you can actually see this inside of your account here. Excuse me, I just had to get a ridiculous cough out. But you can actually see these payoff diagrams inside of your account here. You see that it's more balanced of a position. That doesn't mean that you have to have all your positions have to be equally balanced where you make a dollar for every dollar that you lose. That's not what I'm saying, but you can see visually that this is significantly more balanced than the original position we had here. So just visually looking at this payoff diagram, you can see this huge pit of potential loss on this trade. And we knew with the math and numbers now that the trade didn't make sense, but visually you can see that this one is, potentially a little bit more balanced. So now we reveal what these numbers are, and you can see they're much better, right? Like this is actually a significantly better trade. If you were to compare apples to apples, oranges to oranges, whatever, like you have the opportunity to make a couple trades. This is the trade that you would want to make compared to the other ones. And it's this trade not only because the probability of success is high, that's great, but in and of itself, it doesn't tell the whole story. We can't use probability of success to say this is the whole story. You have to use probability of success, right? That's it. No, that's not the whole story. You need these other metrics to help out. In this case, this has a positive expected value, which is great. It has positive alpha, which is great. We've talked about that on previous shows. And the risk to reward ratio more than covers the risk in this position. And that's why that box actually turned green. So now you can see that risk to reward ratio is green. That's great. That means that we know just visually, we can see it. Hey, we're at least covering the risk on this position. This is a type of trade that we would want to make. And it's this differentiator, I think, is what's really starting to change the dynamic in the market, where you see traders that are actually, starting to get some traction, find success, because they're just finally placing better trades versus just kind of shooting in the dark and hoping that it works out. Okay. So like I said earlier, it's not enough just to place high probability trades. As much as you would like to think that trading 90%, 80% chance of success trades is enough to get you there, it's just not. Like, you just can't do that. That would be like me saying that, like, in order for you to be healthy and physically fit, all you have to do is you just have to walk half a mile a day. Like, that's not going to do it. Like, if you eat like crap and you don't take care of yourself, you don't drink water, that's not going to help, right? Just walking half a mile a day is not going to do it. Same thing with trading. Making high probability trades in and of themselves are not going to do it. You also need to place trades with the risk or reward is in your favor, and that's how you tell. Okay. So we also have this here too, which one of our guys put together, Steve, which was super cool, which is just basically like a little cheat sheet. You can take a little screenshot of this if you want to and kind of use it for your own purposes. I'll show you how you can set this up inside of Option Alpha in a second, just to kind of use this as a set of presets. And so what he did is he went through here and said, okay, if we have our probability of profit as these numbers, and it just depends on how you want to look at it. If you want to start looking at it from probability of profit, or you want to start looking at it from the risk reward side, it's just looking at it from two different lenses. Same thing you're looking at, just different ways of looking at it. But if you have the probability of profit here, if I have a trade that has a probability of max profit at 50%, then what that means is that that trade, if it has a probability of max profit at 50%, needs to have at least 100% risk to reward ratio to make it favorable, right? And so that's the difference here, is like that shows you, like, at 50% probability of max profit, your hurdle rate, air fingers quotes if you can see it on the screen here, your hurdle rate that you need to get over is 100% risk to reward ratio in order to make the trade favorable. So that's if you're kind of approaching it first from the probability of max profit side. Now, if you take the other side of it and you say, hey, I'm going to approach this from the risk to reward side, right? Where I found a trade, I like this trade. This trade has a risk to reward of 25%. Well, then that means that the trade needs to have a minimum probability of profit of at least 80% to make it a favorable trade. So it just depends on how you want to approach it. If you want to start from the probability of profit side or start from the risk reward side, it really doesn't matter to us. It's up to you. But you basically take these, and what you can do now is you can actually put them into trade ideas. I'll show you how you can do this here in a second. We'll just build one out here. But I have one inside of my trade ideas here called 100% risk to reward, 50% probability of max profit. That's literally what I named it right here, if you can see here in my presets. So when I come into trade ideas, if I'm looking for a certain type of trade today, then I can just set presets to find exactly what I'm looking for. In this case, I could do 50% probability of max profit with 100% risk to reward percentage, right? And if I do that, then I can come into trade ideas, set that. And once I do that, that becomes some of the filtering criteria. I also do some other things like ETFs, and expected value, of course, has to be positive. I do certain days to expiration range. But now I can have that as my presets in here to know that I'm capturing enough premium, that the risk to reward ratio is going to be high enough for those probability trades to actually capture enough premium on the position. And now I've got a highly focused list of trades that I can go through and say, okay, I want these trades, or I want these trades, or I can, start auto trading that particular setup if I want to as well. So if you want to do that, again, you just would set that up inside Trade Ideas. So let's go ahead and take one of these and let's do something along these lines, maybe like 40% probability of max profit and 150% minimum risk reward. So we'll just do this one here. Let me just kind of move this arrow up so you see. We're going to do this one here, 40% probability of max profit, 150% minimum risk to reward ratio. So what I'm going to do is I'm going to share my other screen here. Let me just stop sharing there. I'll share screen here inside Trade Ideas. Okay, and I think you guys should be able to see here as I get it loaded up. Yep, there we go. So inside Trade Ideas right now, this is just Trade Ideas currently, right? So at this point, last updated, 226 updates every single minute. It's updated and it's analyzed 57 million trades already and counting. And so you can see it's still counting all the trades that it's analyzed for the day. And so what I can do here is I can go into presets and I can use my existing preset. Now I named this one 50 or 100% RR, which is the risk to reward ratio, and 50% PMP, which is probability of max profit, and 5 EV. Now you can name it whatever you want. You can name it, like Kirk's favorite filter, whatever you want to do for your side. But as soon as I hit that filter, you can see now I've got a highly targeted list of potential trades, right? And these will update every single minute. And so if I want to go in here and say, okay, I only want neutral positions. Well, now, of the entire universe of things that you could trade, that you want to trade, that's on your list or whatever, these are the trades at this moment in time that make the most sense based on this criteria. So forget going into the market and going, man, what do I trade today? Do I make a trade in, GME or whatever is the hot ticker of the day, right? Like, do I make a trade there? Or do I do something else, right? No, you come in here and you figure out trades that have great numbers, great metrics that actually work. And then you find those trades and enter those trades. It's like, this is a good looking trade right here, right? Like you could potentially win $53 with a 51% chance of winning $51, $52. Your max loss is $48. There's only a 35% chance of getting to the max loss, which means you have a positive expected value, which means your alpha is high and your risk to reward ratio is favorable. Now, the hurdle for this percentage, and if you just hover over this, we show you this, and we just want to give you as much information as possible for all of this stuff that you do on Option Alpha. The hurdle for 59 or 51% probability of max profit is 94.87 and change moving, because it's moving with live market numbers, right? So you know that that's the hurdle rate that you have to get over. And this thing is over that. That's why it turns green, right? Because we know that it's over that. If I take this and take the risk to reward ratio out, so before it was in here, right? So before I had 100% or higher, I take it out and I say, look, I just want trades with a 50% chance of max profit or higher, right? And let's just sort by those trades. We'll get those lower probability of max profit trades, right? This one here has a 50% probability of max profit, but the risk to reward ratio is not high enough to potentially take this trade. Now, here's the tricky part. And I will say, this is where you need to start really focusing on your trading, because you need all of these things together to find some of these potentially good trades. Is that if you look at this trade right here, this trade has a $6 positive expected value. And this trade has a positive alpha. So using just those two metrics, which to me, it would be like a checklist to make sure I have all of these complete. But if you just look at those two metrics alone, because you can't look at anything in the silo anyway, you would say, hey, this is a pretty good trade. Like this is potentially a trade that I would want to make. But what you're missing here for this potential trade is you're missing the fact that the expected value is also including the slope of those two extra areas, which means that it's using the perfect world analogy for everything, which means if you would make this trade over and over and over and over and over again, you should have a positive expected value, right? But if you just look at just the max loss and the max profit zone, it's just not quite there for that max loss and max profit. Now, over time, you make this trade 1,000 times, you should have a positive expected value because you're going to capture some of these partial profits and partial losses. And more often than not, you're probably going to capture a couple of these partial profits. Sometimes you'll make $102. Sometimes you'll make $50. Sometimes you'll make $154. So what risk and reward is doing is it's taking the extreme ends of this and also factoring that in. And in my opinion, and you guys totally trade how you want to trade. If you want to trade different, of course, by all means, trade different. My opinion is you need to get all of these lined up, right? Like that differentiates a trade that is marginal, good for many metrics from a trade that's like, look, everything is in order and it's in like a favorable trade for me, that I would feel comfortable taking risk because everything is kind of not stacked in my favor because there's risk, but just like all the metrics make a lot more sense than any other trades that are out there. So if you do see those, just know like that's some of those examples where if you look at this, it's like, yeah, this looks like a good trade, but this positive expected value, this is the marginal edge here, and it's still not as good as maybe some of the other ones. So if I take this back to 100% or higher, and I look at another trade here, like this one here in SPY, this one has not only just a better positive expected value, better alpha, but it also has much better risk reward metrics. So just across the board, it's a significantly better trade from a metrics and stats, like angle or lens that you're looking at versus the other one. So that's how you would do it. Okay, but I did promise that we were going to go through and we're going to look at show you how to set up a 40% probability max profit, 150% 150% risk to reward. So I just basically cleared the deck, clicked on trade ideas. So what I'm going to do here is I'm going to go in, I'm going to say, I'm going to set up first the risk and reward ratio is going to be 150% or higher. And the probability of max profit is going to be 40% or higher. Okay. Now from here, if you just set those here, and that was your only criteria that you wanted to use, you had probably a pretty good list. In fact, you could continuously load more trade ideas here, which means that there's a lot of trade ideas in here. From here, this is where you might want to start to narrow things down and save them a little specific to how you trade. So in my case, I would do something like trading ETFs because I like to trade those more. I would change the days to expiration range. Maybe I would move that out to say 20 days or more, right? So now I can start to filter this down. And now I have still a pretty big list, but it's not a list that you can continuously load more. There's only a certain number of symbols and setups that kind of work in this environment right now for this potential setup. So if I go in here and start finding trades like this, now you can see that I'm finding much better setups. Now these are different setups because the probability of profit is red means it's under 50%. That's just how we do it here when we kind of change these metrics. It's red if it's under 50, it's green if it's over 50. But you can see the probability of profit is right at 40%, and I'm collecting enough money because I need to collect at least 150% or more, and you can see I'm doing that. So even though this is a lower probability of profit trade, just to kind of show you some different variety, this trade right here still has great metrics because it has a positive expected value, positive alpha, and it has great risk reward percentage. So that's a trade that you would want to look at. Again, if you're taking this trade and you're thinking, okay, I don't mind the probability of profit being 40% because maybe the metrics or the numbers work out good for this trade. Okay, so that's how you kind of find it. You put in all this information here. Once you're good to go, you go up here to presets and then you save this setting as a new filter. So we would do something like 150 RR or, and I would also do something like 40 probability max profit, 20 plus DTE, something like that. Whatever you want to do here, now that is saved as a new preset. So you can just jump back and forth between all these different types of trades you want to do right here inside of the platform. So you just come in here, pull up your presets, find those trades that you want to do, get a trade open, enter a trade that's got good metrics. Now you don't have to worry about finding good trades and figuring out which ones work. Just use tools and data like this to actually inform you and get you into those positions easier. Just bring all the relevant information to the surface. so you can actually see them moving forward. Okay. All right. So let me flip back over to my slides here. I think that's pretty much it here. Yep, that was pretty much it. So we'll just go end it with that on the slide. So that was it. So I hope you guys enjoyed this today. Like I said before, when you're trying to find trades, please don't look at just probability of profit as being the only thing, because it's not. Probability of profit is not the only thing. You need to look at that risk reward metric, because you need to make sure that you're collecting enough premium when you win to cover the times that you lose. And oftentimes people are not looking at it. If it's razor close and very close on the metrics and numbers, it's probably not tilted in your favor. You need to make sure you spend time and use your time and attention to find those trades where things are stacked in your favor, and not even just stacked in your favor, but they give you a margin of error that's better than some of the other trades you're just kind of guessing on. So I really hope that this helped out today. As always, if you have any questions or anything you need, please let us know in the comments. And until next time, happy trading. Take care.
Calling all options and futures traders. The markets may be wild, but you don't have to be. Join the Tradier Options Summit, sponsored by SIBO, on May 22nd. Let's tame the volatility with expert tips and strategies on navigating volatile markets in 2024. I will be hosting this full-day virtual online event. Learn from the best. Industry leaders will share their insights, trade ideas, and strategies on navigating these volatile times. Plus, get a sneak peek into Tradier Futures, which will be launching soon. Sign up now to be part of the action. Reserve your free spot by registering at the link below. If you're part of our email list, stay tuned for your invitation and link to register. Also, remember to visit hub.tradier.com. Join the Tradier Hub for free for all your market insights, trading ideas, market news, and daily live shows with industry experts covering all aspects of the financial world. See you on the 22nd at 10 a.m. Eastern Time, sharp.
All opinions expressed by Tradier Hub contributors are solely the contributors' opinions and do not reflect the opinions of Tradier nor its affiliates and or subsidiaries. You should not treat any opinion expressed by Hub contributors as a specific inducement to make a particular investment or to follow a particular strategy, but only as an expression of their opinion. The contributors' opinions are based on their own personal research, but neither Tradier nor its affiliates and or subsidiaries warrants its completeness or accuracy, and it should not be relied upon as such. Any trades or positions discussed or referred to by contributors may or may not be actual live trades or positions. Such information is not intended to be financial or investment advice. Tradier Inc. is the parent company of Tradier Brokerage Inc. Tradier Brokerage Inc. and Tradier Inc. are separate entities with their own products and services. Securities products and services are offered through Tradier Brokerage Inc. Tradier Brokerage Inc. is an independent subsidiary of Tradier Inc. All rights reserved. Member FINRA SIPC.